Welcome, everybody, to Trucking Insurance Tips with Stephen Mandell. I'm John Darr. Let's get on with the podcast.
We're going to have a little chat about Werner Enterprises and an auto accident claim that occurred in 2014, but settled this week. A lady traveling down I-20 in Texas. I-20 at this point is, I believe, 8 lanes, 4 in each direction. She is in the far right-hand lane heading east. The semi-truck is in the left-hand westbound lane. She loses control on an icy road, spins across 4 lanes of traffic, across a grass median, hits Werner head-on.
Okay.
How's that his fault to the tune of $90 million?
There's something I'm missing.
You're not. And right now, every insurance company that I have been trying to quote with has thrown out the book on what claims mean. So in the past, you go to a market to quote an account that has claims. They look at the claims in 3 different ways. Dollar figure, right? Dollar figure compared to premium. So you're going to get a loss ratio out of that.
Yeah.
Now, in that math equation, doesn't matter at fault versus fault, just total paid claims versus premium.
Mm-hmm.
Next one they look at is at fault versus fault. And a lot of, at least in the past, they've thrown out claims that are not your fault, even if there's a payout. They take that out of the equation. And then the third way they look at it is claim count. So you got 5 trucks, 6 claims, that's 1 claim a truck. If there's 2 claims that are non-fault, now it's less than 1 claim a truck, and you begin to make an account look prettier based on how they're reading loss runs.
Yeah.
That verdict now says doesn't matter. No longer matters if it's your fault or not. Claim's a claim, and if it's a $5,000 claim, why that could be $1 million. They've just turned an accident into 1 non-fault, 0 contributory $90 million. And, you know, the sad part about this is we have the driver was a woman, 3 kids in the car. The driver had a brain injury, so I don't know if it was a concussion or worse. One of the kids dies. One of the kids a paraplegic, and the other kid has a serious brain injury as a result. So I think those are the items that create $90 million. But even in that regard, you're still talking excessive payout because now you got to prove an overdue negligence on Werner. Like, how negligent was Werner in an at-fault claim?
Driving down the road, I mean, they were doing nothing wrong.
So basically what the verdict was, the woman's argument that she won was he's a professional truck driver and should have made the decision not to drive under the conditions because the roads were icy. That's literally what the jury said. They agreed with her argument that he made a negligent decision to drive under the conditions that he was driving under.
Even though he wasn't the one that spun out. She was the one that spun out.
Correct. So my argument would be, first off, who's your lawyer? Werner, come on, man. How do you lose this one and lose it to the tune of $90 million? Like,
yeah.
You didn't just lose, you got hammered in court. But 2, it was a trainee driver, so you have a young guy driving the truck, but you have a 20-year vet in the passenger seat. So I think you have a pretty good standpoint to say, we made a positive decision on driving this day. This is our practice as a company, and we didn't do anything wrong. It was proven in the accident that the driver brought his truck to a controlled stop after impact and didn't hit anyone else. So now you got to throw out the fact that this guy's a trainee and doesn't know what he's doing. He did a good job controlling it after the point of impact.
Mm-hmm.
But you could also paint the picture of, you know, sure, you call this guy a professional driver, but is she not a professional driver?
Right. So you have no
a driver's license longer than he has. Right? So if you can point the fact that a mistake was made, why can't any account be placed on her to say you should have not decided to drive that day with your kid in the car?
Because the roads are icy.
Because the roads are icy.
Yeah, and I think that argument you could go back and forth till the end of time. I think your insight as to, hey, this could change the way they underwrite, truck insurance throughout the country. It's pretty accurate, because if you are sitting there going, look, these carriers are going to just throw not at fault, at fault out the window. And if you have a claim, you have a claim, period. We don't care if it's at fault or not at fault, which ironically, they do some of that on the personal lines now. There are companies that will underwrite and say, hey, look, we don't care if the accident was your fault or not. We're charging you for it when we determine what the rate, your insurance rate's going to be. Yep. We're gonna charge for it. And if the trucking companies aren't doing that now, I absolutely think that they would change the way they underwrite and make it so that, yeah, if there's a claim, it's a claim. We don't care whether it was your fault or not. And, the market dictates that, because it's such a hard market right now. They can make these kind of rules and affect these drivers, affect these rates.
Yep. So let's talk about an experience that we had today with a renewal account. Okay, so I wrote this account in 2015 for the first time. He was with a risk retention group, and our conversation about why you should leave OIDA was the risk retention group by design is meant to help truckers that need help. And this was a quality trucking account, a high quality trucking account in my opinion. 5 trucks, no claims, good safety report, a couple of years in business at the time. Let's get you out of the risk retention world into the realm of regular insurance. So in trucking, that's gonna, you could argue the difference between insurance and risk retention, that's a different story.
Yeah.
But if you can get away from risk retention insurance-wise, you're in a better spot.
Yeah.
But trucking-wise, you're going to have freight brokers now give you more loads, because they do see a difference in risk retention versus insurance. And trucking brokerages and shippers don't give you as many loads in a risk retention versus in a regular insurance company.
Same really? Thing. I didn't know that. Okay.
Oh, absolutely. C.H. Robinson, your #1 freight broker in the country, will not give a load to a trucker in a risk retention group. So right there, you're cutting out a huge percentage of freight opportunities just in one broker.
Yeah.
Same thing occurs when you're selling A-rated insurance versus B-rated insurance versus C. Brokers see the rating of the carriers and begin to limit what they're going to give you because of the quality of the policy you're buying.
Yeah.
So we won the account in 2015 by getting him out of that world, and we put him into the reinsurance facility of North Carolina. I mean, rock bottom rates, we save him money at that point in time, but the intention was get you out of risk retention with a regular insurance, keep growing, and get you out of risk retention, get you out of the facility into a quality trucking market. So the year after that, we moved him to Occidental. The year after that, we moved him to Northland. So now you're in A++ 15 rated paper. You're cream of the crop insurance. Everybody on the broker side, they're 50 years in the industry. Nobody does it better. To a quality insurance company, but they're new to trucking. So auto owners have been writing trucking really for like 2 or 3 years. So I told them this is a good price, but it's a volatile market. As in, they're going to make decisions and changes that are not consistently in the realm of what Northland does. Right. So we go through year 1 with auto owners, we have a claim. Now, let's backtrack. We had 2 claims with Northland, both minor claims. Then we have this conversation where I suggest stay with Northland. We move to auto owners. have a claim in year one. About $7,000. So it's a minor claim in our world. Year two rolls around, he has 3 claims. He was involved in a hit and run where auto owners paid about $9,000 to fix his truck. Have a police report, non-fault accident. He is hit by another truck, $26,000 worth of damage, which auto owner recovered in full from the insurance company. So now 2 claims with payment, one's recovered in full, and a pending claim for $2,700 where he backed into a parked car. Auto owner non-renews. This accident occurs and this verdict comes out Monday. Here we sit Friday, Northland decline, Century decline, Great West decline, Occidental decline, National Casualty nationwide decline. So we're looking at, I have the same face on that you have on right now. Like, oh no, this guy's really not that bad. He's had some minor incidents.
Then one at fault.
Yeah, one at fault per year for 5 years in a row with 5 trucks. So you're talking about a loss ratio of 20% on claim count, and really on policy count, he's about 15% compared to premium. But, and here's the kicker, if he would have stayed with Northland, when I suggested him, year 2 he rolls around, year 3 he rolls around, now he's 150 in with Northland with about 10, 11 paid claims. Northland offers renewal this year. His rate would have been about $55,000. Well, I even asked this question to Northland when they declined. Would you have quoted him given same if he never left? And now we're trying to go into year 4 with you, and you're declining his quote because of claim count and some safety stuff on his record. And the Northland underwriter, if I could have seen him, he would have looked me right in the face and he said, "Did you see the Warner deal?" And I go, "Yeah, what's that got to do with it?" He goes, "Throw out the non-fault claims right now because
we're counting.
Those are at fault. We could be paying $1 million. It doesn't matter if he's involved in a hit and run. Based on Warner, that's our fault. So we are now declining." So my policy that I'm sitting on for this man's quote is $102,000 with Progressive or $170,000 with Berkshire.
Whew.
He paid $43,000 last year. So you're talking about 100+% increase in premium in 1 year.
It's going to put him out of business.
Basically, and how we solve this equation is we really spend a lot of time looking at what he has insured, who are his drivers, what can we now slim down, what decisions can you make as a business owner to get the best possible price.
Yeah.
We don't tell companies who to hire and when to fire drivers, but we do look at a quote and go, hey, look, the way Progressive rates is based on the quality of your drivers, and you have 8 drivers on your file. 3 of the drivers on your file have at-fault accidents on their driving record. Minus 1 guy, $9,000 savings. Minus 2 guys, $22,000 savings. Minus 3 guys, $46,000 savings. Hey man, we're sitting on 60 plus. But you have a hard decision to make.
Yeah.
2 years ago, your hard decision was, do I save $3,000 or not? Fast forward, now your hard decision is, do I fire 3 guys and stay in business or not? Because it's not as simple as just, yeah, get rid of them. They got 3 empty trucks.
Right.
So you got to rehire 3 guys, retrain, go through this whole process. And I hate to kind of give this, I told you so. But where I looked at it with my customer was, I really think you should listen to the things I say today when talking about the future. And it doesn't happen that 100% of the time I'm right. I mean, I'll be fair. I'm not clairvoyant here. But in insurance, it's all based on risk. And how do we control our risk? Well, you control your risk in some formats by spending a little bit of extra money today and staying in a stable, solid place, even if it's slightly higher than moving to the next cheapest guy in line. And that was the suggestion I made him in 2017, and he opted to save the $3,000. And if you could rewind time, he would have undone that decision 100% of the time.
Yeah, and it's so hard from, people think that hopefully people don't think that much, but most people think, oh, well, we want you to buy the more expensive insurance because we make more commission. That's a really short-sighted view when, for us, and especially, working in trucking, it's such a volatile situation, where you could have an account that has 0 tickets, 0 accidents, 0 claims, go, get a couple of bad breaks, or now a couple of not at faults, and you've got them literally almost going out of business because the premiums are so high that they can't make it. That's the thing that I wish more people would understand, that as an agent, we're really a consultant. Yes, we make commission. We're not going to hide that from anybody, but we'd rather see these companies stay in business, be healthy, be with the carrier that's going to weather a storm, so to speak, versus going with just the cheapest thing. It's not always a commodity, I guess, is probably the best way to put it.
Well, I'm actually glad you brought up commission. I had this conversation with our new sales guy yesterday. When thinking about commission and thinking about your own personal paycheck and how we make money and how we survive, how do I feed my family? My thing, I came to this conclusion about 13 years ago with a conversation with a general agent who explained it to me in a way that made sense, and I've applied this knowledge throughout my tenure. The day you begin to sell your insurance policies based on the amount of money you make is the first day you need to start looking for another job. Because that will put me out of business by the customer leaving and me making 0 faster than I'll be able to buy the next toy because I took a couple bucks from a guy pushing a product so I could make more money.
Mm-hmm.
So backtrack to our scenario, Northland versus auto owners. What do you think my difference in commission on these 2 policies are?
I was going to say, you actually make more money when he goes to auto owners because the commission rate's higher.
6%.
So
I told the guy to buy a policy that paid me
less,
$1,000 less. And so, you can't get caught up in the commission piece. And I think I'm an open book to clients when saying, this is how much money I make. But your value add to a customer is over the lifetime he's your client, not over the one-off policy I'm going to sell you today.
Mm-hmm.
Again, if you live in that world, you don't develop a relationship with a customer that you take all his money in one shot. He goes, you go with him. So this is a real team. Now, I'm a business partner. I'm his risk manager. More than just this insurance agent selling him a policy, I look at his business, I look at his risk, and we talk about what that looks like today, tomorrow, and 5 years from now.
Mm-hmm.
Versus this is what you have to do. You just got to take the money out of it.
Yeah.
About this in the long run. And in trucking, when we look at these premiums and these insurance companies, like, you don't know what's happening one day to the next. So customers always call in and talk about renewals. How do we handle renewals? What's the process look like? And I tell them, well, we spend a lot of time and energy to win your business day one. And I hear this all the time when talking to new customers about their current agents. Like, they talk to me a lot, but when I bought the insurance policy from them, but I haven't heard from them since.
Right.
My agent only calls me when I owe money. When a claim happens, they give me a 1-800 number to the insurance company. So what's my agent really doing for me at this point?
Right.
I look at it as you literally are the guy feeding my family. And I don't make any money on the first year because I do spend a lot of time and energy to win your business. But when your renewal comes around, it is my job to re-win your business. If I don't shop for you, the next guy you call will. And there's one thing that I've, told all the staff over here: we'll never lose an account to a market we have access to, because that means we didn't try to renew this insured with all of our options. And we open the door for someone else to walk in, offer a product that we have, and he takes it and leaves him, and the odds of getting him back are now farther than they were winning them. If you've lost them, it's harder to get them back than it is to win them again for the first time.
Mm-hmm.
So if you don't put forth that renewal effort, they're going to figure it out. Maybe not first year, but second, third. At some point, some guy like me calls them on the phone and says, is your agent offering you everything that is out there? And then, you plant the seed of, are they really doing it? Well, yeah, let me give you a crack. And then I come in with a quote and say, man, you could have bought this policy 3 years ago and saved this money for the last 3 years. Why was your agent just renewing you in one place over and over? If it's my scenario with the customer that I suggested to stay with Northland, when that agent calls him and says that to him, he goes, well, I know exactly why I'm staying with Northland.
Right.
I'm banking some premium, so if a claim happens, my loss ratios are good.
Mm-hmm.
He has an answer to that sales pitch that's thrown his way versus what we're dealing with. If you don't shop these guys around and they find out about it, they're just going to go to the next guy that's going to work hard for their business.
Yeah. How long have you been a truck insurance agent?
Since 2000. Well, I moved into the industry in 2006. I got my license in 2007.
So, that's the amazing part is 13
years.
You've been in the business 13 years, and if I understand you right, you're more concerned with your existing customer and trying to advise them and play risk manager. It's a much easier thing for both you and the customer, because you know the history, you've worked with him before, you know what he's doing, versus some of these newer guys, new prospects, which, yes, we always need to grow and always want to grow business and that kind of stuff. But, the model at DSI has always been take care of your existing customers. That's the easiest thing for you to do is to work with your existing customers, because, they already trust you. They trusted you once. They're going to work with you and trust you again. And that's always been sort of the motto that we've had, and it doesn't fit the.
I don't think of any person's business on premium size.
Me.
And when I look at it, I say to myself, the little fish is the one that pays my house bill and who pays my electricity bill and who puts food on the plate. Because if the little guy comes and goes, my paycheck is affected very little.
Mm-hmm.
When a big guy comes, I might go buy a boat. But when he leaves, I got to give my boat back, right? So
yeah,
I can't live and die on the big policy, because that money's not going to be there month in, month out forever. I analyze their safety records and their claims histories. I look at their future the same way I would look at a 50 truck account's future, because that guy might be with me for 15, 20 years. I actually have clients in our book right now that I wrote in 2006 and 2007 that are still one truck in business today.
That's awesome.
And if you called them as an agent and said, can I give you a quote, they would basically laugh and say no, because they trust what I do. And, in the grand scheme of the amount of transactions that have occurred, I've been right more times than wrong. And they appreciate the honesty when I'm wrong. I don't have a problem telling them I messed up or I should have done this over that. They appreciate that, and they know that they're not perfect either. So
Right.
have this good working relationship because we've known each other for a long time.
How do people get in touch with you if they want to reach out to you and have them work with you on their insurance? Give us your phone number and email and all that.
So phone number is going to be 352-244-0326. Email is Stephen, Stephen, @protectmyrig.com.
Perfect. Well, I appreciate the time, and this has been podcast number 1, which is hopefully a long list of podcasts of helping those of you out there that are interested in, into the trucking industry, interested in insurance, learning more about how to, do the right thing when it comes to your insurance. I'm John Darr, and for Stephen Mandell, we appreciate you listening.
Thank you very much.